folks? This is Bob Desmond over at The Contrarian Trader, and welcome to Best Stock Charts for the coming week. Immediately following Best Stock Charts, which is our free content, I will be rolling right into the week ahead commentary where I discuss with premium members the strategy for the coming week. Now, were you a member and you watched the week ahead commentary from May the 14th, you would have been positioned short of the markets as we proceeded into the new trading week. And were you a member, you would have watched the week ahead commentary from May the 14th, and you would have had a strategy in place. And that strategy was to be short as the markets went into a tailspin early last week. And here's what I discussed with members, what I was seeing on the charts last Sunday with regard to the 10-year yield, which is a barometer for the U.S. economy. If it's weak, well then that probably means the economy is weak. And you'll also see what I discussed with them regarding the Dow Jones Industrial Average and the transports, as well as the VIX. Give a watch. The week ahead commentary, May the 14th, a brief excerpt. Not quite sure, but this is not good. This is just another straw on the camel's back. All right, so now let's take a look at the weekly charts, U.S. dollar weekly basis. We rallied last week. We closed well off the highs of the week, but we did recapture a prior support level. So the chart looks okay with the exception of the top and tail. No breakout yet on RSI. Why is this important? It's because we're long of the gold stocks. If the dollar rallies, that will not bode well for our gold stocks. Now, the trend is still down on the U.S. dollar, lower highs and lower lows. So I remain more bearish on the U.S. dollar than anything else. The 10-year yield weekly chart, you remember that we broke out the week prior. We had a follow-through week last week, and we flashed a bearish key reversal last week. We managed to hold on to support, but next week is going to be a tell. Do we hold this support level or do we not? If we don't, you should expect to see gold rally. The VIX closed out the week with a 10 handle at 10.40 on a closing basis at multi-year lows. Double bottom setup forming on Stokes. Here's the left side of your W formation set back in September. Pivot point in December. Now we're forming that right side. The VIX is like a coiled spring. The Dow Industrials daily chart, we're consolidating here. Doji star formation on Friday. I'm not willing to say that the Dow is going to drop like a rock early next week, but the indicators are surely not looking good. Double top on Stokes rolling over. Same on RSI, lower lows. Volume is rising to the downside. So the jury is out on the Dow. If we break down below last week's lows at 20,800, we'll probably come back down and fill this gap at 20,600. Now, what should be concerning to everybody are the Dow Transports weekly chart. We reversed last week. We held support, but we bounced right off that 9,200 level on light volume, but all the indicators are rolling over. I think the transports are going to break. And if the transports break, if they're any indicator of where the markets are heading, you can't assume that the Dow Jones is not going to follow through. Weekly chart Dow Jones, really quick. Let's get a feel for it. Possible double top on the Dow Jones, rolling over on all the indicators. I think the odds favor bears. So that was from last Sunday, where I discussed with members on the 14th where we thought the markets were going to go. And let's just take a walk through of how those observations turned out. Was I accurate? And we'll begin with the 10-year yield. I mentioned that if we broke down below this support level here in dotted blue line, we would see a big sell-off. We got that because the prior week was a bearish reversal week. In terms of the Dow Transports, I mentioned that they would probably break. They were looking very weak, and if you get the Dow Transports that break down, in all probability, the Dow Jones would break down as well. So here is our breakdown last week on the Dow Transports below critical support And the Dow Jones, where I mentioned that we had a double top forming, it broke down as well. Now, we didn't have a confirmation breakdown. What is that? That's a breakdown below this key support level. Members, we're going to talk more about these charts on the week ahead commentary coming out later today. So if you're not currently a member and you want to go into the week educated about what we're seeing on the charts so that you can position yourself, please sign up for the 14-day free trial offer. Okay, so now let's segue into the symbols that our members requested that I review on video, as well as the stocks that we are looking to trade in the coming week. So let's begin with the US dollar. And let me play for you my comments that I mentioned to members on Market Wrap from May the 17th. Give a listen. The US dollar, a huge gap down today, down below key support. Last seen back in November, volume was light. So here's what I'm expecting on the dollar. And this is why I booked some profits today in the gold mining names, Nugget. And I'll go over that chart in a moment. But the US dollar is leaning into and trading below its 2 standard deviation Bollinger Band. And if you put up the 3 standard, place the 2 with the 3, we are leaning into it. Does that mean it can't go lower? Of course not, it can. But in the next day or so, we're going to pause. We're going to get a rally. Nugget should pull back. And therein will be our opportunity to back up the truck. Okay, that was my comment with regard to the dollar after the market closed on the 17th. The following day, on the 18th, we rallied. Now, the following day being Friday, we broke down hard. What's going on? We have macroeconomic data that is coming out, both hard and soft, that is very, very weak. We began the week off with it last week. And then on Friday, you had Jim Bullard, one of the Fed governors, come out, and he started telegraphing some dovish statements regarding Fed policy moving forward. Do we hear the beginning of what I've been saying will happen for a couple of years now? We are going to see another round of quantitative easing. They couldn't even take a 300-point down day on the Dow Jones before they got scared and felt the need to come out and begin telegraphing a dovish Fed position moving forward. That certainly does not help the dollar. What it does help is gold. So we'll go to the chart of gold and Nugget in a moment. But the dollar moving forward, I think it's going to remain weak. Might we see a rally? I think so. Just as we saw back here, it'll get oversold and then it will rally back. But as you hear the Federal Reserve become more and more accommodative, more and more dovish, you're going to see the dollar get weaker. Now to Nugget, NUGT. On the 17th, we booked half profits in our position on NUGT. Why did we do that? Well, we knew the dollar was oversold. It was going to bounce. I just played for you that video. We also took a look at the price action. The shares had gapped higher in the morning. They had captured but then gave up a critical support level on a weekly chart. Let's go to it. Here you have it. We were rallying up and through this prior lower band of support, which now acts as resistance. And back to the daily chart, we flashed a hollow candlestick. And we flashed several of them. And when you see hollow candlesticks, it's usually a bearish thing when you're at the top of a trading range. It's fairly bullish when you're at the bottom of a trading range because it's a sign of indecision. And we got the pullback on the 18th, and we began to buy back into NUGT. How do we look moving forward? We'll discuss that with members on the week ahead commentary coming out later today. Now to gold. It pulled back as well on the 18th, but it did rally back on the 19th. We closed above the 50 and 200 period moving averages. We're going to have the 50-day moving average in all probability cross above the 200 period moving average next week. That would be the first time that we've seen the 50-day moving average above the 200-day moving average since November of 2017, back here. So a very bullish event. The technicals are setting up very nicely for gold and the miners. We will be looking to build on our position because we know what's coming down the pike. We have an economy that is next to or maybe even in recession already. We have a Federal Reserve that is planning more quantitative easing, and that is going to kill the dollar. It's going to cause gold, silver, the precious metals to rally higher. And we are very bullish on those names. Our BRZU, we have a small position in BRZU. They have a constitutional crisis going on over there. I was hoping that this president would just resign, but apparently from this morning's news, he plans to stick it out some and fight the charges. So that's not going to help BRZU. So Brazil's not going out of business tomorrow. And what we expect is for eventually this president to resign, and then you'll see the shares of BRZU move higher. As for now, though, as the shares remain under pressure, we'll look to build a position. And what we were looking at last week, and this is what I told members midweek, is that we had to hold this support level and that we would remain long if we closed at this prior support level. We didn't quite close above it, but close enough for government work. I decided to remain long and wait the storm out rather than just closing out the position. And we'll look to add more when the technicals set up better and the news flow becomes a little bit more bullish. Right now, it's bearish, and we're going to just remain long with our small short position and look to add moving forward. UGAZ, this is a member stock chart request. Would I buy it here? No. The shares of UGAZ, which puts you long of nat gas, are in a downtrend. They had every reason in the world to move higher back here. Technically, back in October, it failed. The breakout failed. And we broke down below key support. We have since rallied off of $13.66. What do we need to look for? Let's update the chart. Okay, so what you're seeing here is the UGAZ attempt to build a base. We broke out above this upper band of resistance. We pulled back last week and we retested the breakout point, which is very bullish stuff. The problem is we don't have a confirmation breakout above this resistance level here at, let's call it 23.53. If we get a breakout and a close above that level, well, then our opinion on UGAZ will certainly change and become a heck of a lot more constructive and bullish. So we'll keep an eye on UGAZ as a possible long moving forward, but it needs to close above this resistance level before we begin to build a position. Stokes are hooking up higher, but you don't have both the red and the black line, fast and slow line, above 50. That would make me more bullish. RSI still below 50, which is the neutral level. Volume last week to the downside was very high. Daily chart. All right, so we have a ETF that is in a consolidation range. Here's your lower band. We're at 17.95. The upper band of the range is 23.53. You need to get a breakout above this resistance level here, 23.53, and a close. That would make us bullish on UGAZ. The next chart up that we're watching is silver, USLV. It pulled back on the 18th, rallied on the 19th, a bullish reversal day. We like it. RSI hooking up, no breakout yet, but fairly close. Volume was light on Friday. We'd like to have seen better volume. Both lines on Stokes trading above 50, very bullish. We like USLV moving forward. 3D Systems. I mentioned last weekend on Best Stock Charts, which is still posted on the website, that 3D Systems would pull back. We had RSI at about 90. We were very extended, and we did get that pullback. Now, what we appear to be setting up here possibly is a wedge formation. We need to see a breakout above this upper band of resistance, a pullback and a retest. That would get us bullish on 3D Systems. You have both lines on Stokes that are rolling over. These are going to have to hook back up. Volume was high on Friday, so you had a distribution day. So a caution flag is on the track here. And I would, again, look for a breakout above this upper band of resistance before opening up a new position. Apple. So last week, we were expecting a breakout above resistance. It didn't happen. It broke down and broke down really hard. Now, as I'll be discussing with members on the weekend commentary later on today, I'll be using this term quite often when we are in a situation as we find ourselves in right now after a big pullback after hitting all-time highs, and it's this. The test is always at the top, meaning, do we rally to take out prior highs or do we put in a lower high? If we put in a lower high on Apple, do we break down below 149.71, which is a low of last week? If we do so, we have a new downtrend. That would be a confirmation breakdown on Apple. The same goes for every single chart that's out there, especially with the Russell 2000, of which we are short, the Dow Jones Industrial Average, and the S&P 500. So with Apple, we need to see a breakout above this upper band of resistance before we'd even consider opening a long position in Apple. As it stands right now, it closed right below resistance. So the danger is more so to the downside, and the risk is to the upside right now by opening up a new long position. I wouldn't do it. iRobot, IRBT. This one has had a heck of a run. But I will caution that now we are putting in lower highs on RSI and lower lows. We did rally on Friday to put in a new all-time high. The problem is that we couldn't close there. We saw sellers move in and sell the rally. That leads me to believe that we may see a top in IRBT. I would not open up a new long position. I wouldn't short it quite yet, but I certainly wouldn't go adding more right now. Far too much risk. The test is always at the top. Do we break out and close there, or do we break down? The markets are going to tell us this coming week. LABU. I'm fairly bearish on the market right now until the Federal Reserve announces a new QE program. So until we get that higher level of telegraphing that the Federal Reserve will be a put under this market, I like LABU. I think that we are setting up for a breakout. We had a weak week last week, pardon the pun, but we are holding support, and we may see a breakout if the markets begin to break down in earnest. But I wouldn't buy yet. I would wait for a breakout. We're not there yet. We would have to close above 50 before we began to become very bullish on LABU. Far too early as of now. All right, Facebook. Last week, I went over this on best stock charts. I liked the chart. It was consolidating, but it just couldn't break out. And this is why it pays to wait for the breakout before you open up a position. We would look to have gotten long of Facebook had we broken out above this upper band of resistance. We didn't have a dog in this fight, so I really didn't care which way it went. And it broke down and broke down hard. Now we're attempting to recapture a prior support level. I think there's a good chance that it fails. So I would not be a buyer yet of Facebook. When would I be a buyer? The same rule holds true as it did last week. The same strategy. I need to see a breakout above this upper band of resistance. It's still there. It's still a test. If Facebook passes the test by being able to close above it on rising up volume, Facebook would then be a buy. Right now, I wouldn't short it, but I certainly wouldn't buy it. Twitter, daily chart. I am longer-term bullish on Twitter. I mentioned it last week. I love the weekly chart, but I was cautious about the daily chart because it had become so extended. And we got the pullback we had expected. But after we put in a bullish key reversal on Thursday, we got a follow through to the upside on Friday, but it couldn't hold its gains. We saw a bearish key reversal. So on a short-term basis right now, I'm very cautious on Twitter. Volume to the downside on Friday was light, but I think that we may see more sideways consolidation with a bias to the downside on Twitter. I believe that if the NASDAQ firms up and begins to break out to new highs, you may see Twitter trade along with it. Until then, though, I would wait to begin building a position on Twitter. LSI, Life Storage. All right, so last week I mentioned that we were still bearish on LSI. That has now changed. What we're going to do is we're going to update the chart to reflect the test that LSI needs to pass in order for us to either A, get short, or B, get long. And all we do is take our crayon out, update the chart, sit, watch, and wait for the following to happen. We would look to get long if LSI breaks out and closes above this upper band of resistance. We would look to open up a short position if it breaks down below this lower band of support. Simple as that. I prefer it to break down because that's the macro trend. I want to trade the trend of the overall stock, which from a higher level using a weekly and a monthly chart is to the downside. And there's more money to be gained there than from a short-term rally to the upside. Far too much overhead supply to get through. I would rather see it break down. But that might not be the case, because after putting in a very, very bearish day on May the 16th, we had no follow-through to the downside on the 17th. In fact, we retraced and even exceeded, meaning we had an outside day. That's a fairly bullish day. It cannot be ignored. So for those who are still short of this stock, you better think about booking some profits, especially if we rally up and through this resistance level. So it's not time to short it right now. It's not time to buy it right now. If you don't have a position, there's no stress on you. All you need to do is watch the charts on a closing basis. The beautiful part about not being a day trader is that I don't have to sit and watch all day long how a stock trades. All I care about is where it closes. And that'll dictate to me where the probability of where the shares will trade the following day. So if that appeals to you, that type of trade, setting up your strategy in the evening for the following day, rather than being an impulsive trader intraday, sign up for the 14-day free trial offer. Next chart up, NVIDIA. Do I like it? Not anymore. Why? Hollow candlestick. It's a sign of indecision at the top of a trading range. That makes me very concerned. Now, if we bull flag out, meaning we pull back and form an orderly consolidation like we did here, well then I would buy it on a breakout. But this hollow candlestick here is concerning to me. So while if I were long, I wouldn't necessarily go selling my position, I would certainly be looking to put in a trailing stop loss order just so I could preserve my profits. And I certainly wouldn't buy more or open a new position with this type of price action. So a caution flag is on the track for NVIDIA. FEYE. We booked profits on FEYE a couple of weeks back. We have a hollow candlestick last week. This is a weekly chart. I would wait for a couple of weeks worth of consolidation, and then I would look to buy the breakout. Daily chart. Yeah, you could see that we were extended. We pulled back rather dramatically. This $15 per share level is really critical support. We closed at 14.94. So that's rather bearish. If we make a new daily low, avoid the shares. If we hold this support level here at, let's call it 1484, well then you may want to begin to build a position as we begin to show some strength. Interactive Corp. The last time I spoke about this chart, I said that we were going to get a pullback. We got it. The shares have since rallied back. We have not taken out prior highs. The test is always at the top. Do we break out? Or do we put in a lower high and break down below 99.68? Folks, I don't think we're out of the woods yet. And I'm going to go over our strategy for the coming week with members on the week ahead commentary. And with regard to IAC, on RSI, you're putting in lower highs and lower lows. We're rolling over on Stokes. MACD is poised to go negative. In fact, it did go negative last week. So a caution flag is on the track because I think we have an expiration date which is coming due on the momentum stocks which have been working of late, and we're going to see sector rotation quite shortly. Okay, Alibaba. So the trend is still higher. The problem is that we are seeing signs of topping action. It broke down with the market on the 17th. It reversed. It even put in a new high on Friday. The problem is that it couldn't close at the highs of the day. And in fact, you saw sellers move in and they closed it off the highs of the day. We could not put in a new closing high. Does that mean it's going to break down early next week? No, it just signals that you have sellers out there, they're booking profits. And folks, the thing to remember here is that if and when this market begins to break down in earnest, you have margin debt that is greater than what it was back in 2007. The chickens will come home to roost very, very quickly. People will sell what they can sell to cover those margin calls, which will come due. So I would not be a buyer of Alibaba right now. I would wait for consolidation and then a continuation move out of a nice sound base. Double top on ADX signal line. Very extended on MACD. I would not short Alibaba, but I would certainly not buy it right now. Were I long, I would have a stop loss order in probably right below the lows of Friday. I would keep it really, really tight. Take note of how we're beginning to break down on Stokes. You have your fast line breaking down below the prior lows. Never, ever good. Members, we're going to segue now into the week ahead commentary. If you're not currently a member, you want these videos in the future, enter your email address on the website. We hate spam too. You'll not be spammed. If you're watching this on social media, like, follow, etc., leave a comment, and take advantage of our 14-day free trial offer. Everybody have a great remainder of your Sunday and have a profitable trading week. Members, let's begin the week ahead commentary. All right, members, let's begin the week off with a review of the VIX. Why does the VIX matter? You'll remember that last week we were talking about the VIX being at multi-year lows and wound like a coiled spring. And what happened? It exploded. So what do we expect to see in the coming week?